the end of the day, what really moves the market is earnings or EPS or fundamentals, right? And if you look at Asian markets, next year you will probably see 20-25% earnings growth rate from a very low base. Now, part of that is already reflected in stock prices. That's why the valuations are kind of toppy on your traditional multiples, but you will still see earnings recovery. And I think that's what's going to drive the markets higher. I think the upside risk here is that, let's say if we see some kind of a vaccine in the next few months and that kind of leads to stronger than currently expected economic recovery, I would say there is upside to not only economic growth rate estimates as well as earnings estimates. So at this stage, we are positive on North Asian markets. The momentum is with these markets. COVID situation is under control. If you look at bottom-up stock opportunities, we find plenty of interesting stocks there. We are kind of neutral to underweight on Southeast Asia, South Asia, but there is value there. So let's say if there's a vaccine, I mean, we would look to tilt our portfolios a little bit towards Southeast Asia. But at this stage, the preference is still in North Asia. We need to see more evidence. We need to get comfortable whether COVID is behind us or not before we turn more constructive towards the other spectrum, which is value, which is Southeast Asia, South Asia.
Sure, it's very interesting. And within North Asia, what's happening with Korea? Because this was a market, if you remember, in 2019, which was one of the key underperformers. The won was also beaten down quite a bit. And now it's coming back. I know part of it is because of the management of the COVID-19 crisis and fiscal support by the government. But are you seeing this region particularly outperform the rest of the pack, including China, of course, but really stand out in this comeback move?
So I think there are three factors which are positive for Korean markets this year, right? First of all, there's been a massive support from retail investors. Can't remember the numbers, but I think year to date we've seen retail buying almost more than $30 billion of Korean KOSPI equities. That's a huge positive, and there's a reason why that's happening. Interest rates are low. Property market outlook is not so great. So that money, that savings, that current account surplus has to go eventually into financial assets, and equities is possibly the only avenue. That's reason number one. Second, as you rightly highlighted, it's COVID. I mean, COVID is still under control. We see a little bit, flare up in cases here or there, but largely like 100 cases is not a big deal. That's second positive. And the third is the composition of the stock market. KOSPI, in our view, it has a lot of interesting stocks. You have now pharma, biotech stocks, which are doing very, very well. You could argue that there's a bit of froth there, but generally there is a thematic there. Then you have these companies which are geared to this electric vehicle battery thematic. There are stocks like LG Chem, Samsung SDI. All these are large stocks. They are part of the index, and there is interest in that theme. So one of the arguments we've also made is that if we see a Biden victory, some of these stocks could actually do well in Asia, from a sentiment perspective. So I think there are lots of things which are working for KOSPI. Last year, I mean, the big issue was the index stocks like memory stocks were quite weak. Earnings were quite weak. Those stocks are still they've still underperformed, but it's just that the market leadership has been taken away by other interesting sectors.